Hi, so we're back again with Emma, and today we are discussing all things credit scores. So, credit scores can feel like a bit of a mystery, especially when applying for a mortgage. So, today we've got Emma from G3 Mortgages back again just to discuss and uncover the truth about credit scores. So, we've got a few questions to ask her and just to understand the impact of what a credit score is for home buyers. So Emma, first of all, I think the first question really is, what is a credit score and why does it matter when applying for a mortgage?
Yeah, so credit score is a simple way for lenders to quickly check to see if they would lend to you. So they use a variety of things. They use your credit report, so your credit file from either Experian, Equifax, the usual suspects, and then their credit score takes that, but also the information that we're feeding into it at the same time. So this is why you may have a particular credit score with, say, Experian, for example, and they might say, oh, you've got a score of 700. But that's not the score that a lender would give you, because they have their own internal credit scores that are different and they vary from lender to lender.
Okay, so that kind of goes on to my, I suppose, the next question was what do our lenders looking for the same credit scores? And I know we have spoke with each other, especially when looking at my situation and in the past of different things. And sometimes you can credit score, can't you, or credit search against different lenders and looking at different things. And that's why I always say to people, I think when you're looking for mortgages, it's about your individual situation, isn't it, really?
Yeah, and it's everyone's individual circumstances. And, you could pass a credit score with one lender and not with another, because they all have their own internal scoring systems. And also, I always get people say, well, my credit score is 600 when I get a mortgage. It doesn't really matter, because they're not looking just at the credit score. As a mortgage broker, we know the lender's criteria, and that counts for as much as the credit score in a lot of circumstances. Yeah. So we would, you might have a credit score of 600, but I know that you fit the criteria for, say, I don't know, NatWest. So, we could credit score, and that would be a soft footprint as well. So it wouldn't affect your credit score if we then do a soft footprint for decision in principle, and that will give us an idea. You get a lot of people who have a low credit score, and when it is in the low, below sort of 500, that sort of thing, there is less of a chance of passing a high street lender credit score. However, we have lots and lots of lenders who don't credit score at all. They only credit search. So it's not to say that just because you've got a low credit score would stop you getting a mortgage at all.
Oh, perfect. So what can people do though to improve their score when applying for mortgage? Because obviously it does affect a little bit.
It does. So it does, especially if you want to mortgage. So if you think about simple things, try not to miss any payments on credit. So that includes utilities, mobile phone bills, your Klarna, pay buy now, pay later. It all reflects on your credit score. We're starting to see handset loans, mobile phone handset loans are going on your credit file as a loan, and car insurance is going on as a loan.
I noticed that recently.
Yep. So we're starting to see more and more of that now. A very simple thing to increase your credit score. Make sure you're on the voters roll. Lenders expect to see you there on the voters roll. You should be registered to vote. So there's those sort of little things that really make a massive difference. The other thing I would say, if you're in the process of getting mortgage ready, is get rid of the things that you don't need. If you've got a tiny bit on your credit card, £200 balance, pay it off. It just makes it look better. The other thing I would say about credit cards is not many people know that there is a sort of what they call a high utilisation limit on credit cards. Yeah. So, for example, if you've got a £10,000 credit limit, if you go over 70% of that limit, so say you borrow, your credit card debt is £7,500, that a lender could see you as a high utilisation of that credit card in effect. And that can drop your credit score slightly, especially if you've got more than one credit card in that scenario. So I would always say, do not keep your credit cards near their limit. Try and stay below 70%.
That's a good
limit.
one. And what else? So what else? So obviously, I suspect if you have too many credit applications, that could also harm your score, can it?
Yeah, so the only way that would affect you is if you've had hard footprint searches. Now, the majority of mortgage lenders, when you do an agreement in principle, which is the first stage of asking them whether you would, whether they would lend to you, that tends to be, with the majority of lenders, not all, a soft footprint.
Yeah.
Soft footprints can only be seen by you. So if you've got an account with Experian or Equifax, you can log in and you can see who has done a soft footprint on you.
Perfect.
And that would be the same for if you did a car insurance quote on Compare the Market or Money Supermarket, you will have 30 soft searches against you,
Right.
because all of those providers who have come back with a quote for insurance will have credit checked you. So, but they can't be seen by anyone else. When you go to full mortgage application, that's when it becomes a hard footprint. So it's those you want to limit.
Perfect. That just makes it, because like you say, a lot of people aren't aware of these soft and hard searches and lots of different things that affect and everything like that. So
yeah,
it's really
you need to check, if a mortgage broker is doing an agreement in principle for you, you need to check, is it a soft footprint? One or two, one hard footprint is not the end of the world. It's not going to drop your credit score. It's when you have quite a few in a short succession of time, that's when it can drop and affect your credit file.
So then, I know we touched upon it earlier, but how do missed or late payments affect mortgage eligibility?
So they do. So we have lenders. So you have, your squeaky clean high street lenders who tend to not want to see any missed payments on anything. They might take the odd blip, but they tend to want, completely clean credit history. And we've got your high street, then we've got your mid-range lenders who'll take a little bit of, missed payments here and there, a CCJ, a default here and there. And then we've got our specialist lenders that will take a lot more heavy adverse. Now, obviously, the cleaner you are, the better credit file you've got, the better interest rate you're going to get, because you're seen as less of a risk to a mortgage lender. So what I would say is, if you've got any, historic adverse, try and tidy it up as much as you can. What we see sometimes is we see a loan that was 5 months in arrears. So it will have, it'll go 1, 2, 3, 4, 5 on your credit file. And then you've started paying it again, but you haven't cleared the arrears. So it still says 555 all the way along, because you haven't cleared the arrears. Simple things like that. Clear the arrears. Get that paid off. So all right, we've got that blip. You missed 5 payments, but you have shown that you've rectified it and you've cleared the history. And there's lots of different lenders. There is. Whatever you tell a mortgage broker, if you've got adverse history, you've got CCJs, you've got defaults, you've been bankrupt, never be embarrassed. Just be open and honest with them.
Yeah.
Believe me, whatever you've got, we've seen worse. So as long as you're honest and you tell us what you've got, we can work with that, and we know the lenders that will lend to you.
Perfect. So what's the common myth about credit scores that you really think would like? Do you know what I mean? That's out there, and we want to debunk kind of the myth, I suppose.
So I think the main thing is I find people, more and more are aware of their credit scores, and they have a facility where they're logged in to Experian or Equifax or Check My File, and they get regular updates. And you'll find, these providers will say, you've got a 800 credit score, but to get 900, you need to do this. And a lot of the time, to increase your credit score would be to take more credit out. You haven't got enough credit, and it seems a bit of an oxymoron, but it's because the lender can't see a credit history, so technically it could reduce your score. But don't think that that's not going to get you a mortgage.
No.
There are plenty of lenders that doesn't matter to them, and plenty that don't just go on credit score. And credit score is not the be all and end all for a mortgage application. They're much more interested in, what's your income, how long have you been at your job, or what do you do for a living, all of these things factored in.
The bills,
There's so much more that gets factored in than just your credit score into a mortgage application.
And that's why we have these conversations all the time, isn't it? So my next question was obviously for first-time buyers worried about their credit score. what's the best bit of advice that you can give? And I think you touched upon that earlier, where about enrolling on the electoral roll and watching and different things as well. Is there any of the top tips to kind of give?
Yeah, I mean, the electoral roll's the massive thing, the voters roll. You know, lenders expect to see you there. The other thing would be, obviously, you know, make sure you have, you know, have a look at your credit file. You know, is there anything wrong on there? Is there anything that shouldn't be on there? You know, stupid things. You know, you might have an overdraft of your bank account, and it's a couple of £100. That's the most expensive way to borrow money, because overdrafts are like 30+%.
Yeah.
Just get rid of it. You know, get yourself in the best shape you can. You can physically do before you apply for a mortgage. And you know, if you've got adverse credit, that's fine, we can deal with that, but just do the best you can, you know, with regards to if you've got little balances here and there, pay them off. The worst thing I ever saw, and I would say be wary of credit that you're taking out, especially when you're thinking of getting a mortgage, is the Klarnas. They're becoming a much more prevalent thing that lenders are looking at, because we can see people that sometimes they've got 20+ Klarnas. You know,
I think we need to do a separate full episode on that, because I know that's that people aren't realising, are they?
They're not realising how it affects them, and you know, it could look like to a lender that you're living beyond your means because you're not buying stuff outright. You're thinking, oh, it's 3 months interest free. Why wouldn't I? But to a lender, they're thinking, well, why couldn't you afford it? Why would you have to do it over 3 months?
It's just funny how we got so
just a different way of looking at it.
Definitely. And I think that you don't realise until you're doing it. So that's why I like to put these videos out there, just to help, because we have these conversations all the time, and I really do think it's useful to break down the truth about credit scoring. And as always, I mean, if anyone's got any questions or needs any help or advice, then we're around all the time. So because as I say, everyone's situations are different. And Joe blogs on the street might have an opinion because what they've been to, but actually it's about going to the professionals and get the information that fits for you is what I would say.
Yeah.
So, but no, thank you. And we'll be back here with another episode shortly.
Brilliant.